Good morning. Welcome back to Yahoo Finance Live, everyone. Taking a look at markets. Well, that lasted long for the Dow, which opened higher, but right now is down flat, just barely to the downside. And we're also seeing the S&P 500 and the NASDAQ right now. They are still positive, and the S&P 500 holding up 0.1% in gains. NASDAQ up by about 0.4%. Let's get on over to Jared Blikre, who is here with us in studio for much more on what we're seeing early morning.
Yes, well, we have a mixed day right here, as you can see on the Wi-Fi Interactive. NASDAQ up about 0.4%, as we've been talking about. Wanted to step back a little bit and take a look at where the market has been this month. This is today, by the way. Communication services, by the way, Meta and Snap are each up about 4% and 5%. That explains that. But to the downside, we got energy. It's usually been leading or lagging, and today it is lagging, followed by materials and consumer discretionary. A lot of this is a function of the dollar. But here's what has happened in the month today. We can see energy up about 3.7%, utilities also in the green, everything else in the red. Tech taking a hit for about 5%, followed by healthcare, consumer discretionary, and real estate. All of those are underperforming right now. And now let me take a look at the S&P 500. This is a candlestick year-to-date chart. What we are seeing here is another de-risking event. We've seen several of these before. They have each led to either new lows or testing of lows. And this is par for the course, because every time we've seen, especially throughout the illiquid summer months, anybody questioning the narrative here, and Powell's usually been kind of battening the hatches down, I would say doubling down on the existing message, not necessarily pivoting. Anytime we've seen that, we go through a period of de-risking. And this is what Goldman Sachs had to say. There's a lot of technical gobbledygook going into this report here, but I just want to read a few excerpts, and let me just highlight this here. So this comes from the Market Ear, and this is a very bearish update, so bearish it is almost bullish. So here's what they're saying. As of yesterday, our ETF desk was very active, with desk activity 200% versus month-to-date average. Client flows 3 times better for sales, so they're selling from a diverse mix of institutional and ETF dedicated accounts. De-risking across the domestic equity complex. CTA supply continues to gain momentum the lower we trend. Those are commodity trading advisors. They are selling S&P futures in line with the momentum, which is now to the downside. Several asset managers who typically don't pay attention to these CTAs ask us plenty of questions about them. The supply is real and has outsized impact in a liquid tape, and they're talking about the tape, the liquidity in the SPOOs, that is the S&P 500 futures. This is halved since last week. 3 of the top 5 lightest volume sessions of the year have occurred since last Wednesday. Expect this trend to continue. In other words, we have not figured out this mess just yet. Wall Street is not in the trade just yet, and we're going to have to wait until the other side of Labor Day, probably to find some pockets of liquidity. Do with that as your portfolios may dictate.
Jared, you have any webinars coming up? That's great stuff, man. I would watch that.
Thank you. I have several webinars coming up. Just taped one with Callie Cox over at eToro, and also Jay Woods of Drive Wealth. Encourage everybody to look out for it on our site, writing it up. And got to tell you guys, really excited about these, but there's a lot happening in the markets.
Super excited to see that. Jared Blikre, thanks so much. Appreciate it.